All right, good morning everybody and welcome to another session here on Facebook Live. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully you guys are doing well. If everybody can hear me, just let me know in the comments where you're tuning in from. Let me make sure the audio is coming through fine for you guys so that you guys are seeing everything. If you're new here, once again, welcome. This is something we do every Thursday here on Facebook where we talk about the VectorVest Stock Advisory app, what's going on in the market, and how to utilize the app to suit you and help profit in any kind of market. So welcome once again. We do have a winner for the giveaway that we announced last week. So, if you're here this morning tuning in for that, we will be announcing that in a few minutes. But just letting everybody get in here this morning. Once again, hopefully everyone is doing well. With that, just to give you a little insight on the typical flow of what we do here on Thursdays, we start taking a look at what's going on inside the market today. Then we'll jump into our topic of discussion, which, today we're going to be talking about, potential bubbles, if they pop, how we can benefit from, what type of tools we can use to turn a profit or protect our portfolios from, the pullback, especially when we see what the market's been doing. We've had the market's been continuing to go up. We've been in overbought territory for quite some time. And as always, we're not stating that, the market's going to head south immediately. But at the same time, everything that goes up does come down. And eventually, when the market starts deflating after, an extension for so long, the pullbacks are usually more severe. So that's why we'd rather get ahead of the game rather than reactionary to it. And show you guys exactly how you can be prepared. So, when the market does start to sell off or when we do see a pullback or a correction or profit taking occurring, we want to make sure you guys are prepared and know exactly where to go to find the tools to help you be successful and be ready for it. So that's going to be the main goal of today. As always, if you're new here or if you're just getting started with us, make sure to hit that like button, hit that share button. All that helps me out, continues to grow our group. And that's really the big, the main goal. We're on a road to 30,000 followers. We're just shy of the 30,000 mark right now. So once we hit that, maybe we can do something special for that there. Optimistic about 2021 being a bullish year. So Ken, I agree. I feel like a lot of this looks very similar to what we saw in 2018, I believe it was, where we had, a fairly decent run up coming into the year, a quick correction, and then, a nice steady rise. Basically what we saw all of last year, just with a little bit more severe of a correction a little bit later than what we noticed in 2018. 2018. So that's what we're going to be looking forward to this year. It's too early to say that, and that's clearly just a prediction. It's nothing, no basis for that right now, but looks very similar to what we were seeing then. So once again, good morning, everybody. Hopefully you all are doing well. Let's just see by, you guys get to choose. Do you guys want to find out the winner of the giveaway first before we get started? Or do you guys want to wait till the end? Let me know in the comments there what you guys want to do. We'll go off of what you guys, want to see first here today. So while we're waiting for that, we'll go ahead, take a look at what's going on in the market. So right now we are 3 ticks into the green. The market is bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If we scroll down here, take a look, we get the color guard where we can see those 3 green lights showing up in the price, the RT, and the BSR. And if we look at the MTI, as always, keep your eye on the MTI at a reading of 1.69. Once again, that tells us that the market still is in overbought territory. And as we know, we can stay in overbought territory for quite some time. So take advantage of it while it lasts, but just be prepared, which is what we're going to be doing today, for when that does start to slow down or when the market does start to pull back and has, that healthy correction that gives buyers an opportunity to jump back in at an attractive price there. Let's see. Wait. I'm seeing a lot of waiting. All right, so we'll wait till the end. There's a lot more wait till the ends than answer right now. So we'll wait till the end and then we'll announce the winner. So once again, if you did enter into the giveaway, you have to be here live to claim it. So if you entered, make sure to stick around to the very end. You don't want to miss out on that one. All right. So as we can see, things are looking good. Market's been steadily rising. People's portfolios are looking pretty good, most likely at this point. We scroll down, take a look at the advanced declines. When we look at the advanced declines, we like to see a 2-to-1 bias in either direction. So today, the market's up. We see over a 2-to-1 advanced to declines bias here. Therefore, if you do need to pick up a position, today could be a good day, obviously going to the upside. But once again, knowing where the market is at, just be cautious with it and keep a closer eye on it as well. Right now is not the time in the market to be buying and just sitting on it, forgetting about it. Right now is a time that, we want to be a little bit more cautious in the market right now. But as we scroll down and take a look at the major indices, the Dow is up over 1/3%, NASDAQ's up about 0.7%, S&P's up about 1/3, VectorVest Composite, which gives us a better representation of what's actually happening in the market, up about 0.9% for the day. So with that, let's go ahead and jump into today's topic. Also, George says hi from Charleston. Hey there, George. Charleston, West Virginia or South Carolina? All right. So as we've been talking about, let's go ahead. Take a look at the VectorVest Composite. Over the last 3 months, the market's done nothing but go up, up, and up. We have talks of stimulus. We have a new administration. There's a lot of news out there that can make your head spin. But when we focus on a simplistic look at the market, we see just a nice steady rise, consistent upward trend, barely any pullbacks here. If we scroll out to 6 month, same situation. We did have a little bit of a hiccup, throughout the fall, but once again, market exploded from that point and just steadily taking off. We go to a 1 year. We see that drawdown back in March. And from that point on, blasting off to the moon so far, taking out to new highs. Market's been phenomenal all throughout 2020 and is looking really strong going into 2021. But, to give opportunities to buyers to keep the market going, you have to have sell-offs. You have to have corrections or pullbacks. Those are healthy in the market. People should not fear those kind of things that happen. People should look at them as opportunities here to get into stocks that maybe you missed out on before and be able to get into them early and capture some really good gains with them. And, but during that period, when the market does pull back, you don't just have to sit, on the sidelines or just sit there and watch your stocks sell off and watch your gains diminish. Nobody likes that feeling. Nobody wants to see that happen. And so one of the things that we're going to be talking about is getting yourself prepared for if that does happen. Maybe it's a slight correction like we saw here, back around September, where it's just a minor pullback. Or maybe it's another correction like we saw at the beginning of 2020, where we saw a 30% correction. Regardless of what size it is, we still want to be prepared. And as an investor, it's not fun sitting through those kind of situations and watching that, hurt your portfolio. So we're going to talk about a couple of things you could possibly do here today. Starting off with one of the most basic things, and that's, as we've talked about multiple times in the past, utilizing things such as ETFs. ETFs are exchange traded funds, and they're not really an investment, especially when we see what we're going to be looking at here today. The best way to look at them is more of like a tool for your investments. You can utilize them to help minimize any loss or, help add a little bit of a gain to your portfolio. But depending on your personal preference, you have to be very nimble with certain ETFs or contra ETFs especially. So what we're going to do is we're going to go down here to the picks, scroll down to the bottom and go to the premium watch list here. Does VectorVest Composite not go to a buy? That's the thing with that, Rob, is that because it's more of an index, it doesn't move that rapidly, for the most part. So it doesn't really pull away from its generated stop price, which is going to, hinder it from getting that buy rating. It is possible, but, it has to meet those 4 criteria that we use to get a buy. All right. So if we scroll down, once we're in the premium watch list, we have the indexed ETFs bullish, which are great for the bottoms, but also contra ETFs or bearish ETFs that are great for protecting our portfolio and or just simply turning a gain or turning a profit in a downturn. So if we take a look at the bearish ones, we're going to see ones that are single, double, or triple leverage. And we'll use the S&P 500 for example. So if the S&P 500 goes down 1%, let's say, or goes down 1%, a single leverage or a non-leverage contra ETF on the S&P would go up by 1%. If it's double leverage, that means it would go up by 2%. And if it's triple leverage, that means it would go up by 3%. So Mikey's asking, why be nimble with ETFs? So Mikey, that's a great question. Perfect time to discuss that. So when looking at triple leverage ETFs especially, they can move very, very quickly. If a market explodes off of a bottom, you see a 2 or 3% gain or 2 or 3% up day, let's say in the S&P that day. That means that contra ETF on a triple leverage is going to be down 6 to 9% in a single day. That is a very, very big move for a lot of people in a very short time frame. So that's what I mean by be nimble with contra ETFs. Utilize them as a tool to help keep your portfolio on the right track, but not necessarily as an investment that you buy into and hold for long term. Obviously the market goes up more than it goes down. So buying a contra ETF just in general for a long-term investment is typically not a great idea. So when looking at contra ETFs, they're a tool for our investments, not an investment themselves. Stocks or bullish ETFs can be long-term investments. Contra ETFs are more of a tool in your investing toolbox. So hopefully that explains that for you. Can we do custom searches in the mobile app? No, Monica. Only in the VectorVest 7 software, which you can see right above. Also, I see a lot of people just starting to come into our session here today. So if you're new and you haven't already hit that like button, you haven't already hit that share button, make sure to go do so right now as well. All right. So SH, the very top one. If you notice, it says Pro Shares Short 500. Obviously 500 representing the S&P 500. Well, the S&P is up about 0.17 or 0.2% so far today. And as you can see, this is down about 0.2%. So clearly moving that 1-to-1 inverse rate there. DOG looking at the Dow, PSQ, QQQ looking at the NASDAQ, and so on. Now, some of these, as you can see, like Chad, for example, looking at the Chinese market. If you're not familiar with the Chinese market, obviously, don't utilize that as a tool for your investment toolbox. One of the best pieces of advice that I can give to all the people tuning in here today, stick with stuff that you're familiar with. As an instructor here at VectorVest, working with thousands of people over the 10 plus years that I've been here at VectorVest now, I've seen it countless times where people, trade an ETF that they have no idea what it's referring to just because a buddy of theirs or somebody in an investment club that they're part of told them to buy, or, they read it on a chat board somewhere on the internet that, hey, I should buy this ETF, and they have no idea what it does and wonder why it's moving so quickly. Well, usually it's a triple leverage ETF on something in an area of the market that they're not familiar with. If you're primarily a tech trader, especially right now, with tech being the biggest, hottest area in the market, all throughout last year, coming into this year, tech has been huge. So a lot of people's portfolios own a heavy or a vast majority of tech stocks in them currently, because money goes where money grows. So if you're trading a lot of tech stocks, such as the NASDAQ, focus on looking for an ETF specifically on the NASDAQ. That way, it'll counteract or counterbalance the main holdings in your portfolio. If you're more of a dividend investor, if you're somebody that's long-term holding stocks that are more utility based, look at an ETF focused specifically on the Dow. And typically, if you're going to be doing that, you're most likely not going to be looking at the triple leverage on the Dow. You're going to be looking at a single leverage or a double leverage. The great thing about a double leverage is that you don't have to put as much capital up front to offset the holdings in the rest of your portfolio. So what I mean by that is, if your portfolio starts going down, you hold a lot of Dow shares, let's say, you have a double leverage ETF. You can buy half the amount of the double leverage ETF or the contra ETF. And that will essentially balance out the same as if you bought a bunch of the single or non-leverage ETF. But on the opposite side of things, or the other side of things here, if you do that, you just want to pay attention to it a little bit closer and make sure that, if you do see signs that the market's starting to head back up, or that we're hitting a bottom, that you tighten up your stops and make sure you close out of that quickly, rather than, leaving that out there to start to, go against you here. Let's see. Are you shorting all the S&P stocks? How do they triple? So Tony, with ETFs, they're exchange traded funds. So a company, for example, ProShares is a company that creates these ETFs, and they have ways of balancing it basically so that the fund moves inverse to what the actual or underlying fund is doing. So the great thing about contra ETFs is that you don't have to have margin in your account to be able to utilize these or take advantage of them. You don't have to, a lot of people, to play the market to the downside many years ago, the only options were shorting stocks or trading options on them. Well, options is something we're going to talk about. Shorting stocks is something we're going to talk about. But both of those, or at least shorting stocks, can come with a great increase in risk. Options, you can minimize that risk or mitigate that risk utilizing other tools, or being able to trade or create your own trade, have multiple legs to that trade. But we're going to talk about options here in a second, where we're going to keep it simplistic though for the day. But yeah, so when looking at those, you don't have to have margin in your account. You buy it just like you do a stock. You sell it just like you do a stock. The only difference is as the underlying fund goes down, these go up. And since the market goes up more than it goes down, you can expect to see these grossly beaten down right now. Because what has the market done over the last year? It's done nothing but move higher, hitting new highs, and still gaining traction. Potentially infinite loss, but the thing with that, Tony, is don't be too scared of that. We'll talk about that here in a second, but it technically does have the ability for a potential infinite loss, but we'll address that here in a little bit. All right, so coming down here though, you have the Russell in here as well. So this is a great place to go, easy to find. Once again, under the picks at the very bottom, you have the premium watch list, and in that you have the index ETFs bearish that you guys can get to quickly find these kind of ETFs to help add to your portfolio on the go. Let's see, I got a few questions coming up. Also, yeah, with everybody, with all the people in here today, if you guys are here to see your stocks analyzed, as always, I just ask that you hold on to those for a few minutes. We'll get to those at the very end, and we'll analyze your stocks for you as well. That's the fan favorite that, we always wait till the very end, where we analyze any stock you want to take a look at and show you how you can do so in less than 20 seconds. All right, so we've covered that. Contra ETFs, one of the simplest, easiest ways to protect yourself that pretty much everybody can utilize. The other two are more specific. The first one we'll look at, since Tony was asking about it, is shorting stocks. Now, shorting stocks is a little bit different, and to give a simplistic basic definition of it, or simplistic broad definition of it, shorting a stock is the opposite of buying a stock. But to do that, you have to have margin on your account. If you're not familiar with margin, that's something you definitely want to talk to your broker about. Can help add buying power to your portfolio. So basically, let's say you have a stock at $100 and you expect that stock to go down. So you borrow, let's say, 100 shares from your broker at $100, and then you sell it to somebody else at $100. And then as the stock goes down, and let's say it goes down to $80, well, you buy it back from the person you sold it to, and then therefore you keep that $20 difference. So you sell it back to your broker for the $80, and then you get that credit between that $100 to $80, and that's your profit there. So it does require, some additional features with your broker to be able to do so. Not everybody is comfortable with it, but if you are comfortable with it, we have some great places to go to find stocks that would be good for shorting. So if you go under the More section, we'll go into the screener. We'll go to Explore Screens, and you have the short screens right down here. And we have new sell-rated stocks, which probably not going to see a whole lot right now, but also worst stocks above $20. Angel has a question. What is the stock that everyone keeps saying is under 10 and is in the 5G revolution? Not sure. I haven't seen anybody saying anything, but we can take a look at that portfolio or that watch list here in a moment there for you guys. So let's go ahead and take a look. Worst stocks above 20. You can see the description. If we go and just graph some of these stocks, it's a 1 year. This one hasn't been around too long, but you can see steady decline. If the market starts selling off, expect to see the stocks that are doing poorly in an up market do even worse in a down market, which is good if you're somebody who's selling short a stock. So we can see WNW, good potential candidate. CRTX, big sell-off, creating a new low. If the market starts selling off even more, that could create some more downward pressure on an already downward trending stock. PCVX, another great candidate. RETA. SRPT, this stock was running for quite a while. Pretty big gap here today, in the last few days, going from about 100. What is that? 160 all the way down to 80 overnight. Not want to be in that kind of stock. All right. So if you look at these as well, we take a look. Poor fundamentals, poor RV, poor RS, poor RV, poor RS. Same situation. Once again, same situation. So you can see these are poor fundamental stocks as well. These are not stocks that you want to buy and hold on to for a long time. These are stocks you want to get out, or you want to be able to jump into, make your money, and then get out. Can you see EPS on these charts? Yes, you can, Monica. Let's go ahead and take a look at the next one, new sell-rated stocks. So these are stocks that are just hitting that sell rating as of today. So at the start of a downturn, stocks that are just starting to hit that sell rating were ones that were staying afloat because the market was moving higher. But at the first signs of weakness, those are the ones that are going to get hit the hardest typically. So if we go take a look at the first one, you can see decent fundamentals, but poor timing on it. If we take a look at the graph, go to graph settings here, and then the indicator at the bottom, you can choose the earnings per share. Go back. So this one, QDEL, probably not going to, try to go against it unless you really start to notice, some downward momentum building up some more. But AGI, a gold play, more specific to the conditions of the market rather than any one particular area. BRP. So you can see these are just stocks that are have good fundamentals, but just having a hard time continuing to keep up pace with the market. Is a stop loss a good idea? Yes. So that brings us to the next aspect. As Tony brought up earlier, when looking at shorting stocks, or if you're considering shorting stocks, they always try to tell you that, whenever you do an analysis of a trade with a short, that your loss is unlimited. Well, that's true, yes, because a stock can go, all the way up to infinity hypothetically, and if it goes down, the lowest it can go is 0. So yes, it is technically infinite loss when you analyze these. But as we always talk about, Trade your plan, or plan your trade your plan. Money management, regardless of whether you're buying long or you're selling short, is crucial for any successful trading plan. You always want to know where you're going to be getting out at before you ever get into a trade. We've done countless streams talking about how to set up stop criteria, what stop criteria would be best for you. And so, if you want specifics and details on setting up your stop criteria, make sure to check out our videos over on the live section of our Facebook page, and you can find those there. But regardless of whether you're buying long or selling short, set your stops and follow your stops. Now, because short selling is more aggressive, if you're a swing trader, let's say, whenever you enter into a short trade or whenever you get into a short trade, make sure to adjust your stops appropriately so that way they get you out a little bit quicker and minimize any risk that shorting can possibly bring, because nobody wants to be short when the market starts turning around. It's great for short or for the gains that you make when the stocks are falling, but as we know, the reversals come quickly, so you want to be more aggressive with your stops. Maybe keep a lower percentage loss than what you typically do. Maybe set your gain at something around, 15, 20% rather than maybe 30 or 40%. Be realistic with it and adjust your stop criteria appropriately for the type of trade you're doing when you're shorting a stock. So hopefully that helps give some insight to that. And now finally, the last thing that you could possibly do is options. Now, I'm not going to get too much into options here today. We do offer some great option courses. We have one coming up, I believe, in the next month or two. We have an options jumpstarter course. If you've never traded options, you want to get a basic understanding and start to get yourself into options. We have an options jumpstarter course that'd be perfect for you. Or if you've already have a good idea of the basics, but you want to get to that next level, you want to start doing spreads, you want to see how you can combine two trades together to minimize your risk and help get paid to trade rather than paying to trade. We have the options paycheck course, and I highly recommend it. I have a feeling there's a few people in here that have already taken those courses, so if you have questions, they could probably answer them for you. Do you set a trailing stop loss based on the last price? So Pamela, whatever your stops are based upon would be the price that you paid. It doesn't matter what the last price of the stock was, because the last price is always going to be historical data at that point. It's whenever you set a stop loss, it always should be based upon the price that you paid for that stock. That way you know exactly what number that is. Don't have to short, it is safer. Yeah, and so that's why I want to cover different options. Pablo, the thing about contras is you're buying a fund, so you're getting an average. Whereas shorting can supercharge those profits because you're shorting or you're trading the worst candidates out of those funds that are really helping those, that average move in a certain direction. So, just like when you're buying in an up market, you want to buy the best of the best rather than buying the average, because if you're just buying the average all the time, you're only going to be average in your portfolio. Your gains are only going to be average. So that's why, if you're going, short, that's where the benefits of shorting stocks comes into play. If you short individual equities, they can move more than just the average. So yes, they can go less than the average, but they also have the ability to go more than the average. And that's why that's where the attractiveness comes from shorting stocks. Let's see. Can you show the short list again? Yeah, Barry. So these are under the screens, and you have new sell rated stocks and worst stocks above 20. I believe they're actually in the featured screens. Let's see. Yeah, worst stocks above 20 and new sell rated stocks right here in the featured screens. All right. So last thing is options. Let's get into it. So from the most basic standpoint, if you buy a call, it's like buying a stock and hoping it goes up. The only difference between buying a call and buying a stock long is that when you buy the options or buy the calls, you have to specify a specific price that you're buying at. You also have to specify a specific time frame that you expect that stock to move to be able to get out. If you're buying calls or buying puts, the general rule of thumb is if you're buying a call, you don't want to buy anything less than 3 months out. That way you give yourself plenty of time to let that trade work in your favor. You can always get out earlier, but at least you have some time baked into that trade. That way it doesn't go against you too much, or that doesn't hurt your potential trade. If you're buying a put, that means you're buying and expecting the stock to go down. Or you can buy a put as insurance when you're worried that the stock will go down. So you buy it at a cheaper price. That way, if the stock does go down, that put goes up in value, offsetting some of that loss in the stock that you own. So you can use it as an insurance policy. It's a cheap insurance essentially to do that. Can help protect yourself in case anything drastic happens. And just like an insurance policy, you can close it out early. If the market starts turning around, if your stocks start turning around, you can close that put out just like you do with any trade, and get out of it and, get some of your money back. Whereas an insurance policy, they just keep it. So that's the great thing about a put. Once again, if you're wanting more information on trading options, obviously you can check out some of our courses on that, where you can actually utilize puts and calls together to help actually get paid or take in a credit. But I'm not going to get into all that here today because that's there's a lot to that. All right, so essentially, if you're worried about a stock going down, you could buy a put as insurance, or you could sell the stock, buy the put, make money on the downside, get some extra gains in your portfolio, and then utilize that extra gain to buy more of the stock at the bottom of the market. There's not a whole lot in the app that specifically relates to the options, but with that, if you have a good understanding of how options work, of just calls and puts, you can utilize everything that we've seen here today. So contra ETFs, shorting stocks, you can utilize those to find good options or good candidates that you'd want to buy a put on. Let's see. Hey, I like that. You can't lose unless I sell at a loss. That's true. That is very true. Or if the company goes out of business, that could also happen. Then you'd be forced to sell at a loss and lose everything that you had in that. So with that, that's going to be the 3 key tips that we're going to be talking about here today to help you guys be prepared. So give you guys some food for thought to start thinking about. So that way, if this market does start deflating a little bit, this huge run that we've seen starts to take a breather for a bit, you guys have the ability to know what to do and how to do it quickly and efficiently. So that way you're not getting caught off guard and you can get in sooner rather than later to maximize your profits and maximize your potential with any of those trades. So with that being said, let's go ahead and announce our winner for the giveaway. If you're here, just type it in the comments. Let me know that you're here. I'll send you a message through Facebook and we can get your information, get that set up for you. But the winner today, which was randomly generated, thank you all for everybody who participated, was Morgan Taylor. Is Morgan Taylor here today? If you're in, let me know in the comments. We can get that there. Also, I see why we're seeing if they're there. I had a lot of people asking about stops. Stop criteria is something that we're going to be talking about very soon. We're going to be doing a whole session on it. We've got some new features and new tools to help you guys maximize or figure out what stop criteria you should be utilizing. I can't give too much about it right now because it's still in testing. It's still under the radar a little bit. So, but make sure if you guys are curious about stops or how to figure out stops, this is going to be something you guys definitely want to see. I don't know exactly when I'm allowed to talk about it or when I can bring it on stream for you guys, but it will be soon. Awesome. So I see Morgan is here. Awesome, Morgan. Thank you once again for all who participated. Congratulations. I will send you a message after the stream here today and get in contact with you so we can get that added for you. So once again, thank you all for that. Let's jump into it. That was actually the easiest giveaway I've had to do here so far over the last 3 years we've been doing this. So awesome. If you guys have stocks that you want to analyze, start putting them in the comments. Let me know. Also, if you haven't already hit that like button, if you haven't already hit that share button, takes less than 5 seconds and doesn't cost you anything. Go ahead and do so right now while we're getting these stocks in to start analyzing them here. All right, so let's see. Let's go ahead to the magnifying glass so we can start typing our stocks. RVP. Let's go see. RVP, starting off the first one for the day. So, as always, these 4 indicators that we're going to be focused on are all based on a scaling of 0 to 2. Above 1 is good, below 1 is bad. First one is RV. It's looking at the 1 to 3 year long-term potential of a stock compared to a AAA corporate bond. The RS is looking at the consistency and the predictability of their fundamentals. So, is there a lot of risk in this stock or less risk in this stock? RT is looking at the timing in an uptrend or uptrend or downtrend, and also the magnitude of that uptrend or downtrend. And then overall, it's combining the fundamental and technical analysis all into one to give you a great quick snapshot of what that stock is doing from both areas. Because a lot of services out there just look at the stock from a fundamental basis or just look at the stock from a technical basis. Nowhere else out there combines both of those into one single easy to read indicator like VectorVest does. So when analyzing RVP, we can see it has great long-term potential. It has less risk associated with the stock. It's in a nice steady uptrend on a short-term basis. Therefore, the stock is definitely favorable. We like what we see here today. It's pulling back a little bit, has some volatility, but the earnings are steadily rising like a stair-step pattern from bottom left to upper right. Price is steadily rising from bottom left to upper right. However, it does have a little bit more volatility in it. Let's see what the next one was. Let's go back up. FNV. Great long-term potential. You have solid fundamentals, so less risk associated with it. However, even though it's a great fundamentally sound stock, the timing's just not there. Timing is 0.71, telling us it's in a slight decline, or it's in a steady decline. Therefore, stock is favorable, but just not the right time to be in it. LAZR. So this one has poor long-term potential, a lot of risk associated with it. You have a nice steady uptrend, however. Overall, the uptrend is not strong enough to offset the risk involved with a speculative stock like this. Also, I saw a lot of people last week asking specifically about the values and if we do our own valuations. The answer to that is yes, we do our own evaluations. And if you're in the VectorVest app or in the VectorVest, or if you're part of the VectorVest community, there's a green book that you can get access to. I would definitely recommend reading that. There's a whole chapter. It's only about 50 pages total, but there's a whole chapter explaining exactly how we come up with our valuations. So that way there's no, random, or you actually have an idea of how these are calculated rather than thinking it's just a random number where, a bunch of guys in a back closet are coming up with here. But yeah, overall though, we do our own evaluations and own analysis on all of the data out there and put them into a few simple to easy read indicators for you. All right, so that's LAZR. REGI, great long-term potential, solid fundamentals, so less risk associated with it. You have a really nice steady uptrend. Overall, stock's definitely favorable. XROF, all right. I see you, Jay. XROF, poor long-term potential, does have a lot of risk with it. However, it's in a really nice, strong, short-term uptrend. It's been in an uptrend for quite some time. I like the stock personally. I own the stock personally. So overall, definitely a favorable stock here. It is speculative. There is a lot of hurdles this stock has to get over, but if you look into the research on it, stock has a lot of great potential here. All right, DQ, another one. I believe this one came from our hot stock panel yesterday. DQ has great long-term potential. You have less risk associated with it. A really nice, strong short-term uptrend. Overall, stock's definitely favorable here. Apps, let's go ahead and take a look. Apps, great long-term potential, less risk associated with it, really strong short-term uptrend. Overall, stock's favorable. See, in less than 10 seconds even, I should change the saying from 20 seconds to 10 seconds because, realistically, once you get familiar with the indicators, it takes less than 10 seconds to be able to analyze the stock and get information from it rather than having to, try to figure out a bunch of data and figure out what that's telling you. It really does make analyzing any stock out there faster and easier than ever before. Let's see, GILD. GILD has a little bit below average long-term potential. It does have a little bit more risk associated with it. It's basically moving sideways right now. So right now, stock's not favorable. Let's see. What about a stock like BSGM? They have bad fundamentals, but are just starting to sell their product. So BSGM. So, wait, think about what you were just saying there. They have bad fundamentals, but are just starting to sell their product. There's not enough data out there to say that they're selling their product significantly if they're just starting to get in there. So, what are you doing? You're speculating that this company is going to be able to sell their product and see that explode over the next whatever your time frame is. What is the analysis telling us? Based off the current data, not trying to predict what this stock is going to be a year from now, 5 years from now, 10 years from now, just based off all the current data out there, this is what the stock is doing. The stock has poor long-term potential based on the current data. The stock has a lot of risk based on their current fundamentals. The stock, however, does have a really nice, strong short-term uptrend. If you have an RV and an RS below 1, that tells us the stock is a speculative stock. You're speculating right now of what the stock is going to do in the future. So, looks like, when looking at a stock like this, thing to focus on is timing. At 1.73, really nice short-term uptrend. So, it wouldn't be moving up like this unless, other people thought that this had good potential. Doesn't mean that they're right or they're wrong. It just means that other people are speculating on it as well. So if you're a momentum trader, you can definitely capitalize on trades like this. But if you're somebody who's more focused on, mitigating your risk and focused on looking for more fundamentally sound, more proven stocks, this would not be a trade for you. So that's the great thing about VectorVest. Regardless of what your investment style is, you can always find stocks to suit your need. If you're speculative, this could be a good play. If you're not speculative, most likely you're going to find something else. All right, so FLGT. FLGT has great long-term potential, a little bit better than average risk associated with it, so less risk associated with it. Really nice short-term, strong uptrend. Overall, stock's definitely favorable right now. HD has great long-term potential, has solid fundamentals, so less risk associated with it. However, it's basically flatlining right now or just moving sideways. So the stock's favorable, but timing, need to see it pick up a little bit better. Let's see, LAC. LAC, poor long-term potential, a little bit more risk than average out there with this one. However, look at the timing. 1.93, it's basically shooting up like a rocket right now. So therefore, for you speculative traders out there, it's a great trade because it has a lot of short-term momentum behind it. For somebody looking to trade or for a long-term holding, probably not going to be the best time or best stock to get into for that. COUP. COUP, poor long-term potential. A little bit more risk than average out there. However, you do have some really nice momentum moving this stock. Therefore, the stock's favorable still. Let's see. BABA. BABA. Poor long-term potential. However, they have pretty consistent fundamentals, but timing is in a steady decline. Therefore, the stock is not favorable right now. Let's see. BOA. Not seeing BOAC maybe. Let's go ahead and take a look. So this one, poor long-term potential, a lot of risk associated with it. Timing is basically flat, therefore not favorable. Your chart's showing a 3 and 8 EMA as day trading moving averages. Why using those? Barry, they're not only day trading moving averages. They're just short-term trading moving averages. So you could use them for short-term swing trades. You could use them for day trades. You're not going to be using a 3 and 8 for a buy and hold type of strategy. But if you're a short-term swing trader, momentum trader, 3 and 8 work phenomenally with it. Plus, it saves whatever you were last looking at, and we've talked about those 3 and 8 a while ago. So they just stuck on the chart there. On VectorVest, can you screen for the highest rated stocks easily? Yes. They're actually in a list there for you, Barry. Let's see. UMC. So this one has good long-term potential, about average risk with it though. Really nice short-term uptrend. Overall, the stock's definitely favorable. LMDN or LMND. Poor long-term potential, a lot of risk associated with it, but you do have short-term momentum behind it. So momentum traders like this kind of stock, making the stock favorable right now. Amazon, AMZN. All right, so Amazon, great long-term potential, solid fundamentals, no surprise there. However, we are seeing some profit taking going on, a slight pullback. It's in a slight decline, not a strong decline, but a slight decline. So it has great fundamentals, just not the time to be in it if you're trading it. Most people who own Amazon aren't just trading it though. They're most likely, buying and holding on the expectations of that one. All right, let's see. LOW. So great long-term potential, less risk associated with this stock. You have a nice steady uptrend. Overall, stock's definitely favorable. MARA, poor long-term potential. You have a lot of risk associated with this one, but the timing, look at the timing, 1.69, really strong short-term uptrend, making this stock favorable overall. All right, we'll do a couple of more here for the day. All right, so SOL, why am I not finding SOL? I thought, there we go. All right, SOL. Poor long-term potential, a lot of risk associated with it, but once again, timing. So these stocks that have a low RV and RS, but a really high RT are momentum trades. So if you're a momentum trader, these are going to be a great candidate to look at. Mark, yes, well, not added right now, but there is some stuff we got coming in or down the pipe. So I can't say too much about it right now, but if you're somebody who is having a hard time, if you're somebody who struggles with your stop criteria, you're going to want to make sure you tune in every week so that way you guys, or make sure you turn on notifications and like our Facebook page and follow our Facebook page so you don't miss out on that stream, because that's definitely going to be a good one. I'm excited for that. Whenever I'm allowed to really get in more detail about it, I'm looking forward to that one for sure. Let's see. All right. Grow, GROW. So Grow, poor long-term potential. It does have a lot of risk, but I believe this is a marijuana stock, if I'm not mistaken. Timing is hot right now. Marijuana stocks have been hot coming after the election coming into this year. So overall, stock's favorable for right now, but does have some additional risk. All right, we'll do two more. So we'll do BBY. So poor long-term potential, additional risk associated with this stock. Timing at 1.83, really strong short-term uptrend, making the stock favorable right now. And last but not least, we'll do PSTH. So PSTH. PSTH, poor long-term potential, a lot of risk associated with this stock. Timing is then starting to pick up. 1.4 is the bare minimum you want to see on a speculative stock like this. If you're looking for a momentum trade, 1.4 is the bare minimum that you'd want to accept. So this is just meeting that requirement right there. Therefore, the stock's average right now. If that timing picks up a little bit more, that would be the signs that, this is a good time to be to be in it here. All right, so with that, let's go ahead back to the home page. As we can see, we're still 3 ticks into the green. The market is bullish. We advocate buying safe, undervalued stocks that are rising in price at this time. As always, keep your eye on the MTI, 1.7, getting stronger. Still a cause for concern and something to keep an eye on, as we move forward here. But for the time being, we have still a 2-to-1 or over 2-to-1 advanced to declines bias here today, or ratio here today, telling us if we are going to be buying anything, we want to be buying stocks long. Today's session was preparing us, not for today, but at some point in the future, we're going to see the market pull back, and we want you guys to be prepared. So hopefully today's tips definitely helped shed some light and help you guys start getting prepared for when that does happen. If you found today's session helpful, don't forget, hit that like button, share this with your friends, share it with your family, share it with all your investment groups, and new goal, invite one person, everybody who's here today, invite one of your friends to join us so that way they can learn these tips and tricks to help them become financially independent as well. Because that's our goal here every single week, is to help you guys out there become financially independent and be able to live off of trading or live off the market rather than having to go to a 9-to-5 or working 2 jobs or anything like that. We want to help you guys be able to live a comfortable life all from the comfort of your home or wherever you're at on the go. So on that, I hope you guys have a great rest of your trading day. Take care, be safe out there, and make sure to be here at 11 a.m. Eastern next Thursday as we kick off another stream for you guys. Till then, adios. See you guys in the next one.